The Reserve Bank injects billions into the credit markets. Let's have a look. Good afternoon, everyone. Florian Heise here, and welcome to another episode of HeiseSays. I've got my stein of coffee, and I thought we would have a look at this article from the Financial Review that was just shared to me by a viewer. I'll admit, I had a little afternoon nap because I was quite tired as I was up late all night watching the New York market. And so, last I remember, the S&P ASX 200 was below 5,000. And I wake up and, well, according to this chart, it's 5,395. According to my IQ over here, it's 5,645, shooting up like a rocket. Now, the Reserve Bank of Australia has injected, look at this article, $8.8 billion into the credit markets, mimicking what the Federal Reserve in the US has done. Now, is this the beginning of QE in Australia? What does this tell for the future, guys? An injection of $8.8 billion. Let me know your thoughts and opinions below, guys. Foreign hedge funds are dumping Australian government bonds, and the Reserve Bank of Australia is pumping $8.8 billion into short-term bank funding to ease a serious breakdown in global credit markets. The emergency RBA injection to meet a surge in short-term liquidity demand from banks follows a similar intervention by the New York Federal Reserve, as well as long-term funding lines to banks provided by the European Central Bank and the Bank of England. Australian banks have large amounts of long-term funding and strong deposit inflows, so there is no immediate danger to their health. Okay, luckily the Financial Review is telling us that. What do you think, everyone? What do you think? What is this going to do, I don't know, let's say, for consumer confidence that we have? Do you think it'll affect it? What about business confidence? Will this ever stop? Will this ever stop? Or is that free stimulus money that we're all waiting to get, will that go into some precious metals? The RBA and Morrison government will keep a close eye on credit markets in the US on Friday night to see if the panic selling continues and risks morphing into 2008 global financial crisis-style prolonged shutdown of funding markets in coming weeks. Local bond market sources reported heavy selling pressure and evaporation of liquidity and upward pressure on yields in global government borrowing markets, including the US and Australia. There are alarming liquidity signals, and it's very dark out there at the moment, a bond market source said. The 10-year Australian government bond yield had spiked to 0.96% on Friday afternoon, from 0.77% that morning and 0.66% on Wednesday. The yields rose due to panic selling by offshore investors such as hedge funds, which are scrambling to repatriate cash to their home markets amid concerns the institutional investors may not be able to roll over their own borrowing. Local banks and investment banks, known as market makers, are mopping up the federal government securities, increasing their demand for short-term cash from the RBA. As the Morrison government prepares to run deeper budget deficits to fund its $17.6 billion stimulus, its debt management agency, the Australian Office of Financial Management, will attempt to sell a $500 million bond expiring in 2032 to debt investors on Wednesday. It will be a test for investor appetite for AAA-rated Australian government securities, but also provide an important opportunity for the AOFM to set price discovery in the market and send a signal that the government can fund itself in stressed market conditions. The government is ahead of its funding schedule and could afford to sit on the debt market sidelines for several weeks, while commercial banks could go without tapping bond markets for several months. The RBA injected $8.8 billion into the repo market on Friday morning, compared to the 3.74 billion originally intended volume, in effect providing short-term cash to commercial bank counterparties in return for collateral. Repurchase agreements are where commercial banks temporarily swap collateral such as bonds, commercial bank paper, and residential mortgage-backed securities in return for RBA cash. The central bank is also provided extra long-term funding of up to 3 months, which it only occasionally does. The 3-month bank bill swap rate increased 5 basis points to 0.62%. There's heavy selling of bank bill futures, a bit like the GFC, a trader said. After allowing for some of the RBA's daily purchases rolling off, the net injection was about 7 billion. Commercial bank treasury sources said liquidity had almost evaporated from credit markets. The RBA is not directly... Hang on, I've just got an alert that gold is shooting up. Sorry, I've just been distracted. I'm monitoring a few things at the moment down here. The RBA is not directly buying government bonds, nor it is conducting so-called quantitative easing, though there is speculation inside commercial banks this could happen soon. QE would provide a new RBA buyer of bonds, creating new demand and help easing liquidity problems. RBA's largest repo tranche was 6.56 billion of a funding of 95-day term at a weighted average of 0.66 percentage points. The RBA also provided 610 million of 17-day repo funds at 0.8 percentage points, 6.2 billion of 27-day funding at 0.83 percentage point. Those rates imply borrowers are prepared to pay a margin above the prevailing bank rates. Sources in the market said the industry superannuation fund cash desks were dealing with a large influx of transactions as they managed an influx of rebalancing and investment shifts from their members. The situation has abruptly changed since Wednesday, when Deputy Government Guy Debelle said there had been a material increase in corporate debt spread in global bond markets, but not widespread disruption. My general sense from talking to participants around the world is that there has been more of a repricing story rather than a large selling story, not in every market, he said on Wednesday. At that stage, the RBA had only slightly increased short-term lending to banks through its normal daily operations. Unusually, US bonds and equity markets both sold off on Thursday night. They typically move in opposite directions. So there we have it, guys. There we have it. So I'm just looking at now the cash rate 5,638. We'll jump over to trading economics at the ASX 200. What do we hear? I'll refresh that. So the 5,395. So it is going crazy. Sorry guys, I'm a bit tired. I'm a bit tired. I was up a bit too late. So here we're seeing, up 5,539, up 4.42%. I mean, look at that, guys, from the previous close. What a ride this has gone today. What do you think is going to happen to the rest of the market? How are you preparing to take advantage of this? Do you think the RBA will have to do you think they'll eventually hit QE? Or what about their interest rate cuts for next month? Do you think we will get a cash rate down to 0.25? Definitely interesting times, everyone. Thanks for watching. Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan, there's several ways you can help us. You can share the content, help the channel grow, and get the videos out there. You can use our affiliate links for Amazon and eBay for your consumer purchases, or Independent Reserve and Kucoin for your crypto trading. We also have the ability for you to join the channel here on YouTube or on Patreon, where we receive a small monthly donation. We have merchandise available from HeiseSays or from Teespring. Check the pinned comment below. And finally, PayPal if you want to support us that way. Thank you all very much. Have a great day, and I'll see you later. Bye for now.